There's a group of catastrophists who maybe are hoping this happens, or it's great Twitter fodder.
I think we are headed for some sort of government debt crisis. I said that there's going to be three prongs to this financial crisis. One was these long-dated bonds having unrealized losses, which is causing problems in regional and community banks. The second piece of it's the commercial real estate crisis, which I think is metastasizing right now, which is also going to be a banking crisis once all those unrealized losses come due. And the third piece of it is government debt crisis. We have this $32 trillion debt that we're now having to refinance at much higher interest rates. I read somewhere that half our government debt, so $16 billion, is going to come due, trillion, yeah. And it's going to have to be refinanced in the next 3 years. The average rate on that debt is 1.7%. Well, if you want to refinance it at 10-year rates, you're going to be looking at somewhere between 3.5% and 4%, maybe more. So you're looking at a doubling of the interest costs. And I also read that by 2030, we're going to have over $1 trillion of interest expense owed by the U.S. government every year. That is money that's not funding anyone's Social Security. It's not funding anyone's healthcare. It's not funding one weapons program. It's not funding anything we want. It's the VIG. It's going to be more than a quarter of our total federal budget.
Yeah, and this is where you start gambling. When you're chasing that VIG payment, you start taking risks.
This is also where you have to expect the Fed will really want inflation to stay high. That's sort of what we said before. The only way out of this mathematically is to keep rates high. But the other thing, David, that when you mention all of this is, what about every other country? If you think that's happening in the United States, I think it's important to make sure we at least consider every other major economy, because it's not as if they're pristinely sitting on the sidelines while this happens to the US. This is my whole argument the whole time, which is if you're going to have this argument, you need to do it thoughtfully and relatively, right? Because the euro is in the same amount of trouble. If you look across, it's not as if China is actually sitting pretty and smelling like roses either. Every major economy or trading bloc in the world is going to go through this at the same time. So it becomes a relative trade argument. And there, I just don't know enough to know whether the US is poorly positioned versus Europe or China. But it just seems like you get back to a place where it's like, okay, we need to find the flight to safety. What is the canonical flight to safety? If it's not a commodity like gold, it's probably the dollar until it's not.
Yeah. Okay, Freeberg, obviously other countries have even more acute problems, higher debt to GDP, which means higher debt payments. Just rounding third here on this issue, any final thoughts on de-dollarization and servicing our debt?
Look, we're in trouble. And it's unclear the timing and the path, but the arithmetic is pretty simple. In addition to the point Sachs made, you guys saw the news, the city of Chicago has a $44 billion pension hole. That's just the tip of the iceberg on unfunded pension liabilities from both state government, city government, even private institutions. This is, again, hundreds of millions of people worldwide that are expecting money coming to them from institutions that ultimately the federal government of the US is likely going to have to backstop to some degree. So that's another huge check that's going to need to be written that the federal government is inevitably going to have to write, because we're not going to just let all these people have no money and become starving. And Social Security right now is projected to go bankrupt sometime between 2030 and 2035. So we're going to have to write a check to cover the hole there, plus the interest payment checks.
So, what about Chamath's point, Freeberg, of like relative
can I
to other...
on that?
Let me just say two
let
things.
Freeberg finish. Relative to other societies, other countries.
Yeah. So the very likely case is that relative wealth will decline. So in the near term, I think it's inevitable we have higher tax rates. I've said this before, because in order to kind of meet the gap, even if we have these austerity measures or reduce costs or reduce the budget, as the Republicans are going to push for as this debt ceiling debate reaches its apex in 60 days from now, which you better believe this is going to be pretty damn dramatic. And there's going to be real questions of what happens if the U.S. defaults on its treasuries. If the U.S. defaults on obligations it has on treasuries, there will be a real shift away from using those assets as the baseline of the risk-free rate worldwide. What the other thing will be, I don't know. I'll speak about the challenges I see with Bitcoin, if we want to at some point.
Oh, did it hit 1 million yet? How's Apologies back going?
But if you put all of this together, you're going to have to source income somewhere. You're going to have to take a piece of the assets and a piece of the income away from the private citizenry. So you're going to have to tax. And that tax will be used to kind of fill some of the hole. And then more of the hole will be filled by printing money. And that will lead to this kind of inflation of asset values, which ultimately means that the relative cost of things go up and relative wealth goes down. And I think that's the point to take note, is that anyone who's concentrated assets is going to have them effectively lost in the washout.
Sachs, you want to add?
Well, I just want to add a couple of details there, because Freeberg went pretty quickly over a couple of those examples. So just to take that Chicago case, the numbers I saw in an article this week, I think it was in the Wall Street Journal, was that 80% of the property taxes in Chicago are now going just to pay for pensions. So 80% are going to pay former workers, not current city workers. And moreover, those pensions are only 25% funded. So they've already overpromised by 75% benefits that they can't afford. How is this going to work? And you saw that we just had an election there, and rather than fix the problem, they voted for a candidate, Brandon Johnson, who is even softer on crime than Lori Lightfoot. And the reason for that is because the government workers unions basically all supported him. So you have a situation in these blue cities and states where there's a massive civil service. They are the strongest special interest in local and state politics. They have already taken huge appropriations out of the state budget in the form of these pensions, which aren't even adequately funded. We can barely afford them as they are.
Should we have pension, Sachs? What do you think? Should we just have people doing 401ks?
Sure. So what happened in the 1980s when there was a lot of pension reform in the private sector is you move from defined benefit to defined contribution. So you started having more defined contribution like 401k. The way that these public pensions work is defined benefit. So, what they'll do is they'll say that we're going to take your last year of employment with the city or state, and whatever the amount of money was you made in that last year, you're going to get 80 or 90% of it for the rest of not just your life, but your spouse's life too. And moreover, any overtime you earned becomes part of that calculation. So everyone knows this game. And so what you see is in their final year, state or city employees will load up on the overtime. They'll earn twice as much. And then they'll get 90% of that. Yeah. They get 90% of that for the rest of them and their spouse's life. We just can't afford to have rules like that don't make any sense. And so, but the point is that the benefit that's been defined bears no relationship to the amount of money that's gone into these pensions, right? And so there's a
simple solution here.
You have a huge unfunded liability.
Yeah.
But to Freeberg's point, every blue city and state in the country is going to have this problem. And who's going to pick up these expenses?
You bring up great points, but you just mash them all together in this mashed potato of random things like unfunded pension liabilities, yuan, renminbi, reais trading, and they're like the same thing. They're not the same thing. They're driven by
two different subjects here, but we're talking about the existential
and you just kind of throw them in this amalgam soup, and out comes like these prognostications. So I'm just saying, like, these are important topics, but I'm just saying I do think they're motivated by totally different things, and they're not related as much as we think they are related.
I think they're related.
Let me walk you through how they're related.
Okay, I want to hear how the reais yuan trade is connected to the Chicago pension system.
The holes need to be filled. So the money is not going to just not get paid to the pensioners. Social Security is not going to go away. Just like we saw in France, if you start to do that, you have revolutions in the street. There's literally bonfires at intersections in France, in Paris today, because people don't want to wait another 2 years before they get their pension payments. So ultimately, that check has to be written. When you add up the column of how much money is not on the balance sheet today, how much liability is not on the balance sheet today, that is ultimately going to have to get paid out, and the US government is going to print money to pay it out, it indicates that there is a higher degree of uncertainty on whether or not I'm actually going to get the value back for the bonds that I'm buying in US dollar denominated form, or that the US dollar is actually going to be strong enough to cover the cost, or has enough kind of, or has too much volatility because of this uncertainty. And I think that that's really where people start to say, well, maybe the US dollar isn't that risk-free rate where it's a strong economy with a great balance sheet, great economic growth, There's certainly extraordinary potential because of the freedoms that we have to operate in this country as individuals through the enterprise, through the innovation, through the entrepreneurship, through the attraction of talent from all over the world to come here. But at the end of the day, we do seem to have a very big set of checks that we're going to have to write. And as those, liabilities start to mount, there becomes a real question on, do I really want to hold dollars? Maybe I want to hold something else. And maybe I diversify a little bit. And maybe instead of holding just dollars, I also hold other things. And as that starts to happen, you see a little bit of a shift. And it's not an overnight thing. It's all catastrophic, one or the other. But it starts to bring into question whether the US dollar is the standard de facto system that's used for trade around the world. That's the point.
And Sachs, there is a solution to this. Superannuation is done in the UK and in Australia, where you contribute, you're forced to contribute to your 401k essentially, but you get to learn how to put money away, and you become you have a little more authority over your future with these pensions, where you're responsible for saving and you're kind of forced to save. And it seems to have worked really well in Australia and other places where people have great savings and you don't have this major debt load by the government doing it. So it's something for people to look into. Sachs, did you want to add anything to this?
Yeah,
because I think we've beaten this one to death. Just make it quick. Yeah.
Well, I don't think we've necessarily beaten it to death, because I think it is a huge issue. I mean, look, the part of Chamath's argument that I agree with is that you do have to evaluate the dollar on relative terms. And, you can argue that the U.S. and the dollar, it's still the, let's call it the most eligible bachelor in the leper colony. Nothing started falling off on the man yet, but that doesn't mean that it won't.
That's really good. That's really good.
By the way, the first default might be the nose is falling off,
The economist Herb Stein once said that if something cannot go on forever, it won't. What we're doing right now cannot go on forever. We are running deficits and debts and unfunded liabilities that we cannot afford. And so it will stop. And the only question is how it stops.
Well, I think yeah.
And it may stop in a way that is it's not a voluntary choice by us.
We crashed the car, basically.
Do you guys want to make a bet, a friendly wager for charity? About what happens in June? I'll make a bet with you guys.
June, you mean the debt ceiling?
Yeah. What do you guys think happens? Do you think this is going to be a fractious, chaotic thing where the markets get roiled?
No, I think it's going to be a pretty
rubber stamp,
straightforward deal where it's going to come down to the wire. But my guess is no one's going to want to default on the debt.
Yep.
And there's going to be some concessions on spending. And ultimately, the debt ceiling will get extended. And that those concessions on spending will allow the Republican Party to save face with their voters and say, look, we got some concessions here. I'm not sure they're going to be enough to really address any of the major problems that the U.S. is facing over the longer term. But, certainly letting the debt ceiling hit and defaulting is catastrophic. Everyone knows that.
I'm with Freeberg. I think the majority case is a bunch of hand-wringing and then they make a concession.
All the people that are interested in this topic, I would go use the Wayback Machine and go and read all of the articles in the 80s where you could replace China with Japan. And what happened with Japan is that Japan just hit a demographic wall, not dissimilar to what China's about to hit in the next 15 or 20 years.
Right. It's a good counter argument. Yeah, that's a really good point. And I think that there is this element of, China as the primary threat. But I think the bigger problem, Chamath, is that we have voted ourselves into a stupor. We have allowed ourselves to accrue these liabilities that are, in many cases, not on the balance sheet, that we simply cannot afford to pay. And the social unrest that will arise if and when we don't pay them, or the economic cost of us actually paying them, either of those are going to be pretty significant. But that's water under the bridge, and it has nothing to do with China. It has just everything to do with how the U.S. is spending.
Thank you for being intellectually honest. This is my point. I agree with you about the importance of these unfunded liabilities. I just completely disagree with you that this argument about these things being so hyper-connected, or that all of a sudden we're at the cliff of de-dollarization, I don't think it's rooted in facts. And I think, again, it ignores this unbelievably important piece of logic that all of you guys that say this tend to ignore. And it's still, and it's not even well addressed in Dalio's book, which is, it is a pegged currency. And the minute you unpeg it, none of you know what happens to it, except that it probably isn't where it's trading today. And if you actually then have to factor in dollar reserves that everybody holds, that thing would skyrocket in value and it would crush the export value of the yuan. And it happens to all currencies. And this is this funny thing that has happened to the United States, which is that it ran forward and it transitioned its economy to a service-led economy faster than other countries and other economies and other currencies did. And nobody wants to just talk about that, except it's the facts.
We're talking
and
about
that's what sort of drives us.
Go ahead, Sachs.
I don't think the big risk is that all of a sudden the dollar gets replaced by the yuan as the world's reserve currency. I think Freeberg lays out a more intermediate path, which is people start to hedge their dollar exposure. And decisions that used to be automatic, like trading oil in dollars, the so-called petrodollar, now it becomes a little bit, more of a decision. So, the Saudis.
That's what happened with the pound sterling. It was a similar story, and it was not an overnight collapse. I mean, there were certainly these kind of punctuated moments where there were hits, but, the history is that there was a slow devaluation over time, and as a result of obviously the economic pressure and the uncertainty.
Actually, no. What happened to pound sterling was that it was pegged to the US dollar and then it became unpegged. So exactly what I'm talking about.
No, even post that, Chamath.
Even post that, if it's a free-floating currency, yeah,
you're proving
No, dude, you're proving my point. When Soros broke the back of the US dollar, what he forced George Brown, or what he forced the Chancellor of the Exchequer to do, was to basically depeg the pound. And then, yes, you're right, it's been like this ever since.
Yeah,
that proves what I'm saying. It was not. If you let it be free floating, nobody wants to trade in that other currency. Everybody wants the dollar. As bad as the dollar is, David's right. It is the worst affected leper in the leper colony.
Yes.
The handsomest leper still in the colony.
This is why you have to have, if you're going to be intellectually honest, just have a relative conversation about all of the currencies and all the things that they're also going through, which are also not perfect.
The debt payments for the emerging and the frontier markets are extraordinary.
Just realize that if you want to go and peg your economy to somebody else's back, they also come with their own trials and tribulations that you have to risk manage as well. And now you have to decide on balance, do you want to risk manage a centrally governed economy, right, from a central bureau, or a freewheeling democratic? Like, these are all the discussions that people should need to have.
Yeah, there's a lot of choices there.
Just back to the non-currency part of this for a second. There are a lot of connections between these things. I actually think there is a strong connection between what's happening, for example, in Chicago with the out-of-control civil service and the unfunded pensions all the way to the dollar status. But there's also a connection between commercial real estate and these pensions. So on a previous show, we talked about the commercial real estate looming crisis. And a lot of people thought that, some of the comments we were just talking in our book, which is not true. I don't have a dollar invested in any of these office towers. But you know who does? Pension funds.
Yeah,
that's who owns these office towers. So you're talking about pension funds that are 3/4 unfunded, and they may have a lot less funds than they even think they do, because we're about to have a huge reckoning where all of a sudden these office towers that were supposed to be blue chip, that were supposed to have the best collateral there was in major American cities, now all of a sudden they may not be nearly as valuable as they thought they were.
Yeah, and if they don't own the building, they definitely own the debt. 100% for sure in the fixed income portfolios of all these pension systems are the debt that was used to finance these buildings by the REITs and by, the big real estate funds that put those things together. So you're absolutely right. They are 100% impacted by what's about to happen.
We're not going to allow, given the civil unrest and social unrest risk, and obviously as a democracy, we're not going to allow that all to go to zero, and we're not going to let pensioners not get paid. Ultimately, that's just a kiss of death. Maybe pension payments are reduced to some degree. But again, Paris is a really great example of, as you start to try and shift the economic guarantees that have been made to pensioners, even slightly.
Yeah, what was it, 2 years in retirement? 62
they
to 64?
Tried to move retirement
64
age
to 62?
2 years. Yeah, and it was certainly you could sit here and argue what people for their whole life, had this expectation set. We have all, for our whole careers, invested in the Social Security benefits that we're owed as retirees through every paycheck that we've received. And those Social Security payments may not end up coming back to us if Social Security is allowed to go bankrupt. So ultimately, the government has to step in and issue new dollars to make that up. Then the economic question is, what happens to the value of the dollar? What happens to the value of the economy? And so on, as you issue trillions of dollars to fill these holes.
Let me ask a question that's a little more positive here, perhaps, which is there a path out of this, debt cycle we're in? And what are the top ways in which we're going to get ourselves out of this. I have three that come off the top of my head.
Increased productivity.
Hold on. I have three off the top of my head. Number one is austerity measures. Number two is productivity through technology. And perhaps number three is maybe recruiting more entrepreneurs here to start more companies and fill some of these jobs. So intelligent immigration, which
Number
I'll call
one is higher
recruitment.
taxes. Yeah. Number one is higher taxes in terms of what's likely
That's
to
a
happen.
fourth
Or
one.
reduce spending.
That
Or
would be a
reduce
fourth
spending.
one. That's
I think higher
austerity.
So look, higher taxes because you can go after assets, you can go after wealth. So there will be higher taxes.
Okay. So
Right.
that's a
I
fourth.
still think we'll end up seeing 70% tax rates on the wealthiest people in this country.
70%?
I don't see it being like unpopular. I think it's going to be unpopular with the wealthy. It's going to be popular elsewhere to fill the hole. Second is cut back on spending, but that's a really hard thing to do because, as we've talked about in the past, people vote to get more stuff. So you put the politician in who's going to vote to get you more stuff. You don't vote people in to go cut spending. So generally, we're going to likely see number one happen first. Maybe there'll be a reckoning where you kind of reduce spending. It's going to take extraordinary political will and an extraordinary depth of education and diffusion of understanding of this key critical economic problem amongst the voting class, which is a really hard thing to realize. I think number three,
You're saying get the public to
understand
that we have to have austerity measures.
Yeah,
very
and
hard
then
to
number
do.
three, and basically people are going to have to make sacrifices. So the first sacrifice will be the wealthy. They're going to have to sacrifice through higher taxes. The second sacrifice will be everyone else by seeing reduced spending and reduced kind of
Services.
ways, the services, et cetera. The third is the hopeful one, but we don't have a guarantee on this, which is, do we see economic growth through productivity gains? Can we create leverage with our resources and our people by using new technologies to get more with less? And,
Certainly.
anytime, again, I gave the example last time, but when a tractor was introduced in agriculture, all the people that were farming the ground didn't have a job anymore. But what happened is new jobs emerged in making tractors and servicing those tractors, in gas pipelines to get gas to the tractors. All these economies emerged as a result of that economic technical innovation. So I think as we see AI and other innovations hit the market, new economies and new industries hopefully really blossom, and we can benefit from that economic growth and also lower costs for people on purchasing goods and services.
We've identified four things.
When Reagan came in, wasn't the highest tax rate like 70%?
Yes.
Yeah.
That was the top marginal tax rate, 70%. And
70% is not unheard of. It will happen again in the U.S.
well,
Yeah.
but Reagan unleashed an economic boom by flattening the tax structure because marginal tax rates created a disincentive for people to work and produce more. And so there is a big economic hit from this.
Yeah.
And remember what the 1970s were like. It was the malaise days of Jimmy Carter. We had a horrible economy with high inflation, and everybody was paying high tax rates, and the government wasn't making that much revenue because there wasn't as much economic activity going on. And during the 1980s, we had an economic boom, and the government actually collected more revenue with lower tax rates because so much economic progress was unlocked.
Sachs, we identified four things.
So it's like we've learned nothing.
Which one is the most important here? Or which ones are the most important? We talked about austerity. We talked about increasing taxes. We talked about innovation and efficiency. And then we talked about immigration, recruiting more highly talented people. When you look at those four, do you have any to add to that list to get out of this? And which ones do you think are the most important and why?
When you look at federal tax revenue over a 50-year period, go look at the Fed charts. What you see is that quite independent of the top marginal tax rate, the amount of federal receipts that the government's able to collect is roughly around 19%, plus or minus 2%. And so you can only get so much blood from a stone. You can try to raise the top marginal rates, but then rich people have an incentive to basically find more tax-protected strategies. So the history of this thing going back 50 years is you can only extract so much from taxes. And what you're better off is a lower tax rate that is broader based, and you go for economic growth that produces more activity. But look, if you're spending too much, there's no way out of that.
So austerity, critically important, and entrepreneurship.
Well, I mean, when Bill Clinton left office, and I think Reagan through Clinton was the biggest 25-year period of economic boom we've ever had, federal spending as a percentage of GDP was 18.5%. He got it down from like 22%, and he did it through economic growth, and he bragged about it.
Yep.
So, look, where you want to be is, I think, federal spending should be in the low 20s. I think you want tax revenue to be in the high teens, 19%. You can have a small deficit. Those are the conditions for economic growth.
Chamath, any thoughts here on our way out?
I'm going to take the complete opposite of all of this, which is the anti-Chicken Little version, which is I think not much at all changes. I think that debt to GDP will continue to rise, not just for us, but for every other country in the world whose fate is worse than the United States. And I think that on a relative basis, the United States will continue to be exceptional, and that this will not really be an issue in our lifetimes.
Okay.
And I'm not saying that's a good thing, and I'm not saying that's a just thing, and I'm not saying that's what I want to happen, but pragmatically, I think that that's what will happen. And I don't think that there is a magic number where all of a sudden things start to break, where there's some magic number for debt to GDP, where all of a sudden everybody finds religion. Instead, I think that it just creeps higher. And by the way, if you look at where debt to GDP was at the turn of the 19th century, and then what happened through to World War II, what we've really done is, we've retraced a lot as well. So there have been moments where we've been out over our ski tips a lot. And so I think it's just important to keep in mind that sometimes what works just continues to work. And I keep asking myself the relative question, which is what country, what economy, what group of human capital is better positioned than the United States? And despite all of the things that are screwed up with this country, it's hard to find a better example. So
yeah, unless you happen to have the lucky mineral or oil club like Norway or Saudi Arabia, you're going to be hard pressed to find a better place to plant your money. And I think entrepreneurship and immigration are the two most important things we can do, as well as austerity. And I think Joe Manchin is or these moderate candidates in the middle who might actually be able to talk about cutting.
But
spending.
By the way, you said something really interesting, which is if you look at Norway, Saudi, Abu Dhabi, what are those countries effectively becoming by monetizing the oil? They invest in all of the economies that are working.
Perfect segue. Thank you.
It's not as if the Saudis and Abu Dhabi and the Norwegians aren't trying to invest in America. They're trying to put as much money to work as possible. They're just trying to pace it out so that they have time diversity and asset diversity. So to your point, Jason, it's sort of a bit of a self-fulfilling prophecy. I think that what has worked continues to work, and then the burden for disruption gets higher and higher.
Yeah.
That changes.
There's two things that work in the world: having those natural resources or having entrepreneurship. Let's make a segue here.
Wait, can I add the final point on that?
Oh God, we've been final pointing for 20 minutes here. Go ahead. Quick final point.
This is an important discussion, I think.
Okay.
So Adam Smith once said that there's a great deal of ruin in a nation, meaning it takes a lot of political bungling to screw up something as big as a nation, especially a nation that's the number one superpower in the world, that has the world's reserve currency. So we are, in some ways, the beneficiary and coasting on hundreds of years of excellence, of economic performance and great political leadership in this country. And the question to ask is not whether we can still coast on that, but whether the political leadership we have today is living up to the standard we had in the past. And I think it's clearly not. And the only question is when it breaks. And it's hard to predict exactly when it's going to break, but what I do believe is that if we keep going the way we're going, it will have to stop.
Well said. We're definitely bending it right now. And when you bend it, sometimes it breaks.
Right. And by the way, the reason why we are going to pursue AI at breakneck speed, even though it may lead to some sort of weird dystopian future, is because we need that productivity boost. We have no choice now
100%.
Because we are so
and frankly, better us than the next guy.
Absolutely.
Better us than the next
Whoever
guy.
gets there
and we
first
don't have
wins.
a choice.